And what, however, is not weak is the Q3 update that we got from V-Mart Retail. That's the next company on our radar. Now, V-Mart reported what looked like a pretty good operational update for the third quarter. The revenue is up by about 16%. Same-store sales growth has come in fairly healthy in double digits as well. To talk about this, we have Mr. Anand Agarwal, Chief Financial Officer of V-Mart Retail, now joining in. Thanks very much, Mr. Agarwal, for being with us. I'm just pulling out the numbers for the benefit of our viewers as well. 16% revenue growth and same-store sales growth at 10%. It's very good, but if I compare it to the 9-month same-store sales growth, then it's 10% versus 12% for the 9 months. Let's dive a little deeper into what you're seeing in urban, in sort of semi-urban, rural, and what the contours are behind the 16% revenue growth.
Hi, good morning. I must say, I think the going has pretty been good for the last 1.5 years. We've been constantly improving on our operations, and obviously the macro also is helping. There's definitely far better traction that we are able to see both in the rural as well as in the urban segments. When I say urban, it's not really so much of the urban customer for us. It's still a tier 2, tier 3 kind of customer who comes even in a tier 1 town for us. So that way, I think what we are seeing is a recovery from the last 2-3 years. Post-COVID, this segment had definitely gone down a bit, and that is where we also saw our numbers plummeting down a bit. But now for the last 1.5 years, we're seeing a good recovery, both at the macro level as well as a result of what we have been doing as part of our revamp and restructuring.
Okay, so give us some projections. Now we're almost done. I mean, just last quarter left in the full financial year, right? You grew 20% in the second quarter. Now the top line growth is 16%. So FY25, looking at the fourth quarter, what is the overall revenue expectation that you have?
I think we should still be able to grow at mid-teens or high teens. That's the trajectory that we have set for ourselves. I think quarter 4 is a very small quarter. But having said that, quarter 4 will also see early Eid and probably a winter Holi. So that should bide well for all of us, and us included. So I'm quite hopeful that quarter 4 should also pan out quite well. We are also opening a lot of new stores. We have seen a good traction in the new stores that we've opened so far this year. And also the numbers look promising in terms of the performance or the sell-throughs that we are able to see on the ground. So quarter 4 definitely looks promising. At an overall level, therefore, the total growth should be in mid-teens or high mid-teens. At the same store sales growth level, I think high single digit or maybe just touching double digit is something that I would still target for.
How were the discounts, Anand, in Q3? Was it more than normal given the kind of urban consumption fatigue that we're seeing? And what would be the outlook on margins now?
No, I would not say that we put in more discounts. We did not see a lot of fatigue in the segments in which we operate, which is like tier 2, tier 3 towns, not as much in tier 1. We did not resort to a lot of discounting. There was a bit of concern early on due to the late start of winters, but later on, I think pretty much everything is normalized. There's a bit of concern around winters in East India and other central parts of India, but otherwise things probably remain normal. As far as the margins are concerned, I think we should still be able to see the kind of growth that we've been seeing so far. The numbers are still to come for quarter 3. So I would not like to comment so much on the margins, but margins should remain in a healthy range.
And what about LimeRoad? You had earlier indicated that break-even should happen by Q4 FY25. Is that on track?
Slightly challenging. It's a very, very small business, but an important business for us. It's less than 5%. The online business is less than 5% of our overall revenues. We've been constantly improving our performance on LimeRoad and the other parts of the digital business. The losses there have come down by almost 35%. The revenues have also come down. So we're not targeting to buy revenue. We are targeting to make that business sustainable. As far as the break-even is concerned, I am not too sure we should be able to see break-even this year. I think we are still some distance away from that. But the good part is that we've significantly reduced our cash burn. We've significantly reduced our losses from that business. And we are building towards a much brighter and a better online business as a portfolio for VMart.
So what's the cash burn right now in LimeRoad? And do you think by the end of this calendar year, is there a possibility it can break even?
Possibly, yes. I will not say again on a full year basis. There may be quarters, there may be periods where we will break even, where we may, also have a profitability. But the online business is such, mired with such complexities, that's very difficult to, run that very profitably at a low average selling price. And our average selling prices on LimeRoad, as far as our merchandising mix is concerned, is definitely much lower. So we are running it more like a omni enabler for the VMart group, and that's the objective. So it will still remain probably a cost center, not as much a profit center in the near future.
Okay, so that's LimeRoad and the digital business. Finally, to come back to the capacity addition and the store rollout plan, I think you're at 488 stores as of December. How many more are you looking to add in this fiscal year, FY25? And overall, I mean, what's the rollout plan for the calendar year as well?
I think on a full year basis, we should be opening roughly around 55, 58 stores. There may be a few store closures that may come in Q4. We've not closed any stores the last quarter, that being the festive quarter. So we typically avoid any store closures in Q3. Q4 may see some amount of store closures, which are very normal, nothing abnormal. So every year there should be 1% of store closures, 1 or 2% of mistakes that we will actually always end up doing. So that will happen in Q4. But on a full year basis, the net store addition should still look like around 50 to 55 stores.
Okay, all right. Anand, we'll leave it on that note. Thank you very much. Once again, wish you, the very best for 2025 to you and, of course, your team at VMart Retail. That's VMart, but we